All right, traders, the stock market is on fire and the macro is really continuing to kick in. As you guys know, for the macro, I was expecting SPY to hit 464. With that being said, we are really starting to see some bullish confirmations come in on the SPY as it has now turned key critical resistance at 446.60 and also $450 into valid support levels. With that being said, I'm going to walk you through the micro price action analysis on how to trade the best setups at the best prices and how you can adapt to this market. Tomorrow is going to be a very important day. We have a lot of people speaking within the Fed meetings, and I'm going to walk you through this price action on how you can trade these both ways for the micro and for the macro and what to expect moving forward. We're going to be going over AMC, MULN. We're also going to be going over NVDA, TSLA, and SPY. Those are going to be the top 5 on my radar into the rest of the week. In terms of my day was red. I ended up making some mistakes, taking a premature entry on some SPY puts very close to market open, and then I got stopped out for a 19% loss. With that being said, I'm going to recap the mistakes that I made on that trade. I also had a nice little win on AMC. I ended up buying AMC at $18, sold it at $18.60. Also played calls for a quick 30%. That was a couple thousand, so that helped out for the day, but still currently red on the day. With that being said, I'm going to recap the trades towards the end of this video, but let's get into the updated price action analysis. So in terms of the updated price action analysis, let's get into SPY. Let's start off with SPY here. So in terms of SPY, first things first, let's go over the monthly chart. The monthly resistance on the SPY was at 441. That's reacted as a valid support level. We're starting to see the breakout in terms of the daily chart. The key critical gap close reversal level with huge downside potential was at $446.60. It is now reacting as a valid support level. So the trend has clearly shifted for the micro. The bulls are in complete control for the micro, and this is also an attempt of the macro kicking in. You can also see in terms of the squeeze indicator, a squeeze was triggered right here on the teal blue. Ever since that was triggered, SPY has been going up from an overall macro point of view. With that being said, the macro is kicking in on SPY because it's able to turn $448 and $446.60 into valid support levels. With that being said, in terms of like how high can this go for the micro, if the SPY can break above $450 and turn this 450 into a support level, how high can this realistically go for the micro, for the short term being? Realistically speaking, we can go to 450, 250. If it breaks above 450, 250, the next resistance level is going to be at 456 to 457. In terms of SPY breaking down, it has to fake out at 450, and we need to see a strong crack of 448. If 448 cracks, then the next level is 446.60. If 446 cracks, then it's going to have a very nice sell-off into the low 40s. Those are going to be the, in terms of both ways in trading the overall price action. In terms of a key critical level I'm going to be paying attention to tomorrow is going to be 449.59. If it reacts as support, SPY is going to be very bullish. If it reacts as a resistance, SPY is going to be very bearish. In terms of the micro, we are currently sitting at make it or break it levels on the SPY. And as of now, it is turning all key critical resistance levels into a support level. And just to show you the possibilities, I do believe this is going to happen at some point, which is why I bought Shopify, which will be following the SPY. I do believe for the macro, the SPY will continue to go up, and we're going to see a gap fill. There's a gap to fill at 464. Once that gap fills, stocks are going to explode towards their 3-month highs. The best companies towards Facebook, Shopify, PayPal, stuff like that, right? And what we're currently seeing is we could be seeing something like this. If 450 holds, at some point this is going to happen, but we could be seeing something like this where it just continues to go up. Like it has some small little pullbacks along the way, but it just continues to go up and explode, and then it starts to fill the gap. The gap is at 464.72. As you can see, once SPY reversed and started exploding, it topped out in the 469s. Then it had a nice pullback. So keep that in mind. Some point in this year, we're definitely going to see a 464 gap fill level. Like I said, if you've been watching my videos, the way I've been taking advantage of the macro movement is by buying Shopify. I bought Shopify right here at $638 on March 17th. I'm going to continue to hold the position. I could see Shopify heading to fill this gap. There's a gap to fill at 746.85. If it reacts as resistance, it's going to see a nice pullback. If it breaks out, it's going to see a nice breakout. It's going to start to fill the gap towards $890. So with that being said, that's what I'm looking for on the SPY. This 450 level is going to be a key critical make it or break it level. Now, you might be wondering, like, how do you protect yourself from this happening, right? Because at some point, we know this macro move is going to kick in, but when we're day trading for the micro, how do we protect our puts from not being in a situation where we're just buying puts every single day at key critical resistance levels, getting stopped out because SPY just keeps on going up? Here's how you protect yourself. And I told you guys this within the chat, and this is what I'm planning to do moving forward. So as of now, I'm not too interested in SPY put options. I'm staying away from the idea for buying put options on SPY because the macro is kicking in. It turned key critical resistance levels into support. There's no reason to be buying puts on SPY in terms of my strategy. With that being said, in terms of how can you identify when a good time would be to buy puts on SPY, this is what I'm going to be looking for. So what we could potentially see is something like this, where SPY just breaks out and it just continues to go up. It has some small pullbacks along the way, and then it fills that gap at 464. Then it starts to have the reversal. That's the one possibility. That is going to happen sometime this year, whether it's micro or macro. I'm not too quite sure. But for the macro, it's definitely going to be happening at some point where we see this gap fill 464. So how do you protect yourself when you're in puts? In your day trading puts, how do you know when to get back in on the puts, when this whole macro move is occurring? This is what you have to look for. You have to wait. So look at what SPY is doing. It's just going straight up, right? SPY is just going straight up. It's like a straight line. It just keeps on going up, green day after green day after green day. What you want to do is you want to wait for it to consolidate. Wait for it to form a price channel. Wait for it to form some resistance. Wait for it to sit a couple days. So what does that look like? It looks like this, and I'll show you some examples. And for those of you who followed my past videos on the SPY way back in the day, you're well aware on how I was able to use what I'm about to show you to buy puts when it was in the 470s towards the all-time highs. Wait for it. So like right here, this is a great example. See how it's just ramping up? And then it's just sitting. It's just consolidating. It's forming a little price channel. It's forming bearish candlesticks. It's not breaking out. Once it runs out of steam, once it's consolidating, once it's forming red candles, once it's no longer a straight line and it's just sitting like back and forth, that's when you buy and kind of ride out the puts, right? So I'm showing you some examples. These are some examples. It just trades back and forth like a bouncing ball, right? And it just consolidates and it forms a small price channel. It forms red bearish candlesticks. Same thing here. Same thing here. This is a great example. This was the screenshot that I showed. Another thing is when SPY turns dark blue. You can see as soon as it turns dark blue on the squeeze indicator, that was literally the all-time highs for the SPY, and then it got crushed, right? So that's how you prevent yourself from, not continuously entering into puts, trying to predict and figure out where the top is going to be. So moving on from here, I'm really not interested in trading puts on the SPY until it can sit. It has to find a channel. Right now, it's just going straight up. And if you look at what happened, imagine if you were playing puts every single day right here towards resistance levels, you would have been stopped out every single day and you would have been on a red streak instead of a month, right? We were just on this crazy green streak for like almost 40 days straight. The count nearly tripled. The trend is shifting, so we have to adapt, right? So the first step to adapting is like sit on the sidelines. You want to sit on the sidelines for the puts right now and just wait for a channel to form, wait for it to start to crumble, wait for it to start to sit towards some resistance, form some resistance, give it a couple days, wait for the bearish candles to come in. Then there's going to be a swing trading put opportunity. So that's what you got to wait for. You got to wait for it to sit. Also, the best level to buy puts is at $464.72. When SPY gets that high, I'm hitting puts very, very heavily. I'm taking the risk. I'm hitting puts heavily, and I'm going to be looking to swing trade it. I got to get the bearish confirmation, but whenever that occurs, I'm hitting it heavily, and that's going to be that's going to be expected to be a very, very big win, like at least 100% plus win. So I'm looking forward to that. I'm going to be hitting that with some size because that's like a once in a lifetime opportunity for this year. So that's the game plan. Very, very simple stuff. We're just waiting in terms of puts. We're waiting for it to just sit towards a resistance level. Give it a couple days. Bearish candlesticks, valid confirmations, just wait for it to sit. Once it starts sitting and it runs out of steam, see how it's just sitting here? Then it starts to sell off. Don't be in a situation where you just keep playing puts every single day it's going up, right? You can see right here, it's doing the same thing. it starts breaking out above the key resistance levels, and it's just going up in this like straight sideways line. But then you could see once it starts to sit and just crumble and consolidate, that's when you buy the puts. So when SPY is ramping up like a straight line, you have to wait for it to consolidate a couple days. You have to wait for it to form bearish candlesticks on the daily a couple days. You have to wait for a new price channel to form. Then when we see weakness within the channel and it struggles and it fails to break out, we could buy the puts. So that's where we're at. So take it easy, take a step back on the puts. You got to calm down with that. There's no reason in terms of my strategy right now to be buying put options on the SPY. Now, let's go over some other stocks. AMC is getting very interesting here. So in terms of AMC, it's up very, very nicely in after hours. Currently trading at $20.23. The high is $20.79. In terms of the overall price channels, what I'm seeing right now is you can see there used to be a gap to fill right here at 2057. When it filled that gap, reacted as resistance. That was basically the death of this. With that being said, let's kind of see how it reacts tomorrow to 21 to 2080. If it shows signs of weakness, it's going to be a put opportunity. If it breaks out above 21, it's going to continue to run, and the next level that it should run to is about $22. So I want you to understand this is a previous support level with huge upside potential. That's what this is. Right here, 2080, this is a previous support level with big upside potential. What happens when it forms new lower highs and it cracks that support level? Instead of having big upside, it does the opposite. It has big downside. So this is a key level for AMC where a huge move, it already had a big move, but another big move is about to happen. It's either make it or break it for the micro on this stock. If $20.80 reacts as a resistance level, AMC overall is going to get crushed for the micro. And it's going to be something like this where it just ramps up and then it gets crushed, pops back up a little bit, and then it just sells off hard. Ramps up, pops back up a little bit, then it just gets crushed and sells off hard. Now, if it can turn this 2080 into support and start to break out, we're going to see a major shift on AMC, and it's really going to start to push. There's actually a gap to fill at $25.49. So what I'm telling you is if 2080 can react as a support level and it breaks out, the bulls are in control for the micro, and it's going to try to ramp up to fill that gap at $25.49, which would be one of the best resistance levels to buy puts to short AMC. So we'll see how it reacts there. If 2080 reacts as support, the target would be towards this gap fill level. Once it fills the gap, if it reacts as a resistance, that's when you buy the puts. If 2080 fails to break out, then it's going to be micro puts. So that's what to look for on AMC. The key level, the make it or break it level, is 2080. This is a big upside, big potential downside level in terms of how it's been reacting. It did crack and it did react as resistance. In terms of if that can change, as of now in after hours, that has not changed. Tomorrow is going to be very revealing. Make it or make it or break it day for the micro price action on AMC. So like I said, just one more time, 2080 is your key level. If it reacts to support, the overall macro direction is going to be this $25 gap fill. If 2080 reacts as a resistance, then we're going to be looking at a similar situation where it just overall sells off. There's going to be some pops, there's going to be some fake outs, but overall it's just going to sell back off. That's my thoughts on AMC. I gave you the key level. We'll see how it reacts tomorrow. If it reacts bullish, then we're going to be looking to potentially buy with smaller size because it is overextended. If it reacts bearish, then it's going to be interested in playing puts with bigger size because it's overextended for the short term being. Best level for puts is going to be $25.49 for the gap close reversal right there. So for those of you trading AMC, I mean, if 2080 turns into support, the highest I could see this going for the micro is $25.49 to fill the gap. Then it most likely gets crushed and has a reversal for the micro. So that's the thoughts on AMC. That's going to be a number one watch. That should work very, very well with my strategy. It's at a make it or break it level as of now. 2080 did react as resistance in the extended hours. So we'll see how it reacts tomorrow in the pre-market. NVDA is getting very, very interesting. In terms of NVDA, we had a gap to fill right here on NVIDIA at 269.42. It's got big downside potential. It's got major resistance. There's gaps to fill below. So if NVIDIA can stay under this, the key level we want it to stay under is going to be $269. It's got to stay under 269. If it can continue to stay under 269, we're looking at a crack of 260. Once it cracks 260, we're looking at a pullback to about 246. That's the thoughts on NVIDIA. It's due for a pullback. It's looking fairly bearish on the daily chart. It looks like it's trying to have a gap close reversal. That's the thoughts on NVIDIA. So yeah, we'll see how this one plays out. We'll see how it reacts. The max risk is going to be towards 269 on the puts. Overall, the chart is very, very bearish. The only problem is SPY could potentially flip it. NVIDIA hasn't been following the SPY to an exact T. Guys, give me 1 second. Hello? Oh yeah, you can send the food up now. Thank you. So yeah, like I was saying, with NVIDIA, that's what I'm looking at on NVIDIA. Very, very simple stuff. So in terms of the next one, MULN is at a key gap close reversal level. So in terms of MULN, this had a gap close reversal. As you can see right here, there was a gap to fill below at an average cost of $3 and, an average cost of $2.90. It came back down, it filled the gap, it turns it into support, it's having a reversal, and then there was a gap to fill above at 320. It ended up breaking out above that. Let's see what it's doing in extended hours. So in terms of extended hours, let's see here real quick. It's holding up nicely in extended hours. So if this stock can continue to stay above 3 to 320, it's just going to keep going higher. It's really going to start to fly up. It's really going to start to go higher. It just needs to hold above 3 to 320. If you're in on this long, the most I would risk on this is like $2.90. That's going to be your make it or break it level for the stock. As of now, it's having a gap close reversal. The bulls are still in control. The squeeze is triggered. So if it can stay above 320, we're looking at a move to $4 on MULN. So yeah, those are going to be the main setups that I'm really looking at. The last one is going to be Tesla. I got food coming here in just a minute. So I'm going to answer the door and then I'll get back and finish this video in a second. But in terms of Tesla is at a make it or break it level for the micro. What I'm currently looking at on Tesla stock is going to be right around here. It's getting very interesting. We're approaching some key critical resistance on Tesla. You can see right here, you got major resistance towards $1,000. And what I'm looking at is this level right here, major resistance at 987, and then it sells off hard. So these are some key critical resistance levels. There was also earnings though around this time, so you have to take that into consideration on the chart. Right now, the micro chart is extremely bullish. A squeeze is still triggered on Tesla. So it's at a situation where it's make it or break it. If it breaks above 1,000, we're looking at a very nice rip. If it cracks 993, we're looking at a very nice pullback. So we can see a first red day on some of these. It could be a nice opportunity to buy some micro put options if we see that first red day happen. So we're looking at kind of a first red day on a potential play for that. But yeah, in terms of the trade recap, let's quickly get into that here. So in terms of the trade recap, very simple trades in and out. So you can see right here, let's see if we go to MULN alerts. So in terms of the trades, I took a SPY put at 9:35 a.m. The problem with this one is it was a pre-amateur entry. Typically when you're trading options, you want to give it about 15 minutes. Right around 9:45 a.m. is when you really want to give it if you're going to be trading towards market open. Give it till about 9:45 a.m. to make a decision whether you're going to get a put or a call. So I got in right away at 9:35 a.m. on this candle. Why did I get in? Because SPY formed a bearish trend reversal candlestick towards market open, and it almost filled that gap. So I was doing the same thing I did yesterday. It's just the problem is partial gap close reversals, aren't proven to work the best. That's the thing. It worked twice yesterday. Today it didn't work out. So the win rate on that for the past 2 days was like 67%. Still green, in the overall week. But I didn't do what was best for the portfolio, and I should have waited. Like if you look at how SPY reacted yesterday as well, yesterday it had a very nice morning spike. If you go back to the chart on yesterday, you can see right here it had a very nice morning spike, and then it topped out at 9:40 a.m. So I should have waited a little bit further. If I were just to wait, I would have had a possibility of making at least a small gain. But yeah, the problem is it had a breakout at that 446.60 level, and then it turns it into support right here. It turned it into support right here. So if you're in on puts at 446.60, playing the gap close reversal, the key resistance level, and you see it reacting as support, see how it's reacting as resistance, it pulls back. Now it's reacting as support, the pins. If you see that happening, it's pushing up, you got to get out and you got to cut the loss. And that's what I did on the SPY. I cut my loss right here at 10:21 a.m., which was right here when it hit 448. So I held this one out a little bit longer. I got in when it was at 446.50, and when it hit 4480s, that's when I got stopped out for a 19% loss. So I get back some profit for the week. The mistake that I made was the pre-amateur entry, and just not waiting long enough. I should have waited at least 15 minutes. Like if I were to wait towards 9:40 a.m., there was a little pullback where I would have been up about 10%. Like that was a real thing where it dropped $1 from that level. It formed the doji. Yesterday it had the morning spike. It formed the dojis. It formed the resistance, had a nice little pullback. That's about a 10% profit on safe puts. If you're playing the riskier ones, you're looking at 20 to 30% plus. So there was a potential opportunity there. It's just the problem was I took a pre-amateur entry on the SPY. I jumped the gun as soon as I saw the bearish candlestick. I should have gave it more time, and I should have done what's best for my portfolio and wait for the gap to fill. The gap never filled on the SPY. And as you can see, once it did fill the gap, right after I got in, once it did fill the gap, there was no reason to get in. There was no reason to play puts on the SPY once it filled the gap, because it reacted as a support. Reacted as a support, reacted as support, reacted as support. It had a breakout. So that's why. If the key critical resistance levels, the key critical trend reversal levels that I'm using react the opposite way, the stock's going to keep going in that direction, right? So you have to understand that if 446.60, this gap close reversal level with big downside potential on the daily reacts as a support level, breaks out, SPY is going to be bullish and it's going to continue to run. No matter how high it is for the micro, the macro is going to kick in. So remember, with puts, we're in a situation where the macro is bullish. So if a key critical level, like right here, this is a key critical level on the SPY, 446.60, if that turns into a support level, the macro is going to kick in. And no matter how high, no matter how overextended it is for the micro, SPY is going to continue to go up. So just remember that. We're macro bullish right now. If a key critical level reacts as a support level, it's going to go very, very big against you. So you got to get out and you got to cut the loss. Like I do, I cut my losses quickly. And then AMC, I had a nice little win on this one. I bought the breakout. The squeeze was looking very strong. The volume was looking very strong. I bought AMC right around here at $18.10. It had a very nice move to the upside. As soon as it formed this candlestick right here, this wick, and then this double top, I sold for profits. And I'm glad I did that because it went below my initial entry, and I would have gave back my 30% win I had on calls, and I would have gave back my nice little win on shares as well, right? So I wasn't playing for the bigger set of move, looking to get in, looking to get out. Tomorrow, there's going to be a crazy move at 2080. That's the key critical level. So you guys, that's going to wrap it up. If you are interested in joining Trader Society, it's going to be the first link down below in the description, where you do get lifetime access for everything. So if you want to check it out in terms of what's included, that's going to be the first link down below in the description. I will see you guys tomorrow live at Market Open. For those of you within Trader Society, we trade live every single day. I'll also be sending out the watch list tomorrow in the morning. So I'm going to wrap up this video lesson, guys. Tomorrow's going to be a very interesting day for AMC, for Tesla. Stocks are at their make it or break it key critical levels. And just be aware that the macro is still very, very bullish. And like I explained to you with puts, we got to wait for consolidation. We got to wait for resistance to come in. We got to wait for a price channel to set up. As of now, it's just a straight line and the macro is kicking in.